Hello dear traders, welcome to Insta TV. Let's take a look at the most important financial events for today. The board of the Reserve Bank of Australia failed to provide an accurate assessment of the domestic economy. Yesterday, in the monetary policy statement, the government assured investors of the steady economic growth. The board expected GDP to grow 0.5% in the third quarter. However, today the Australian Bureau of Statistics released a dismal GDP report, which is a cause for alarm among investors. Despite forecasts, the Australian economy shrank by 0.5% in the September quarter from the previous one. Markets had expected a quarterly decline to 0.3%. The GDP figure fell into negative territory for the first time since 2011. An annual growth rate also slowed down sharply in the third quarter. In annual terms, the economy rose 1.8%, well below the forecast of 2.5% expansion. The annual figure has been the weakest in 6 years. Experts are searching for clues to an abrupt slump in the economy. They say the resource-rich economy still depends on commodity exports. The authorities are making efforts to shift focus towards other sectors, but the process of channeling investments to the services and retail industry is very sluggish. While economists are discussing the reasons behind the slump and the possible solutions, traders are certain that such a downbeat report will influence further stance of the Reserve Bank of Australia. The regulator is forced to cut the cash rate at a policy meeting in February. Meanwhile, the Australian dollar quickly lost ground amid the new data. The Australian versus the US dollar pair dropped sharply 50 pips to 0.7420. Judging by the technical indicators, the pair is to follow the bearish bias until the close today. Fundamental analysis also signals the downward bias of the pair. The countdown for the policy meeting of the US Federal Reserve is already underway. It is widely expected to raise short-term rates at its December policy meeting. The head of the Federal Reserve Bank of New York, William Dudley, noted yesterday that arguments for tightening monetary policy are more forceful now. This was Daily Financial News on Insta TV. Thank you and goodbye.